Welcome back. Today we're conducting an exhaustive analysis of Broadcom's latest earnings report. We'll break down the numbers across 13 key charts. Before we dive into the data, please take a moment to like this video and subscribe to the channel for more institutional-grade financial research. Now, let's get started. Starting with revenue, Broadcom has shown an incredible upward trajectory, reaching nearly $20 billion. This represents a 29.5% year-over-year increase. This growth is primarily driven by their dominance in the semiconductor and infrastructure software markets. The historical chart from 2009 showcases a story of relentless growth, both organic and through strategic acquisitions. The 2-year and 5-year compounded annual growth rates of 27.1% and 23.7% respectively underscore the long-term sustainability of their business model. As a key supplier to major hyperscalers and enterprise data centers, Broadcom benefits directly from the exponential growth in data and AI workloads. This consistent top-line expansion is the foundation upon which their entire financial success is built and executed upon. The demand for their networking and connectivity solutions remains robust, providing excellent visibility into future quarters. This solidifies their market leadership position in the high-performance semiconductor industry. Looking at EBITDA, we see Broadcom's world-class operating efficiency. The company generated over $12 billion in EBITDA. This showcases a remarkable year-over-year growth of 36.8%, demonstrating their ability to translate revenue growth directly into strong profitability. The consistent upward march of the EBITDA bars on this chart is a clear indicator of superior operational management. It shows a highly defensible business model with significant pricing power in its core markets. The 5-year compounded annual growth rate for EBITDA stands at a staggering 28.1%, outpacing even their impressive revenue growth. This operating leverage is a key reason why investors favor Broadcom. As the company scales, a larger portion of revenue falls to the bottom line. This efficiency in converting sales into profit is a hallmark of a best-in-class technology leader with durable competitive advantages. It is also a result of a disciplined approach to cost management across all of its business segments. Net income further corroborates the strength of Broadcom's business model, scaling impressively alongside revenue. The company reported a net income of nearly $10 billion for the period. This is a testament to its powerful combination of high-margin products and disciplined operational execution. The year-over-year growth of 33.5% is remarkable for a company of this size and maturity. This chart clearly illustrates the journey from a smaller, volatile earnings profile in the early 2010s to a consistent, cash-generating machine today. This profitability is not just on paper. It translates directly into the massive free cash flow that supports their industry-leading dividend and strategic flexibility. The consistent expansion of the net income line, even through various macroeconomic cycles, gives investors confidence in the long-term earnings power of the company. It's a clear signal that Broadcom's strategy of acquiring and integrating best-of-breed technology assets is paying off handsomely for investors. This provides a strong foundation for future growth and continued shareholder returns in the years to come. Free cash flow is arguably the most important metric for Broadcom, and the current report shows a record surge in this area. The company generated over $8.5 billion in free cash flow, representing a staggering 33.2% year-over-year increase. This is the real cash profit left over after all operational expenses and capital expenditures, and it's what funds their generous dividend. The chart shows an almost uninterrupted climb, demonstrating an incredibly efficient business model that converts revenue into cash at a very high rate. The 5-year compounded annual growth rate of 21.7% highlights the sustainability of this cash generation over the long term. This immense liquidity allows Broadcom to operate from a position of incredible strength, enabling them to make strategic acquisitions. It also allows them to invest heavily in R&D for next-generation products and consistently reward shareholders with growing dividends. It is this powerful cash flow engine that truly defines Broadcom's financial prowess and industry leadership. Earnings per share data reflects the consistent value creation for shareholders. The chart shows a powerful long-term uptrend in EPS, reaching nearly $2 in the latest quarter. This 31.6% year-over-year growth is a direct result of rising net income and disciplined management of the share count. While there was some volatility in the 2015-2017 period during major acquisitions, the trend since has been remarkably stable and positive. The 5-year and 10-year compounded annual growth rates of 38% and 27.7% respectively are truly world-class. This level of EPS growth is what attracts long-term investors, as it demonstrates the company's ability to not just grow its business, but to make that growth highly accretive on a per-share basis. It shows management's capital allocation strategy is creating substantial value. Broadcom's commitment to dividends is a cornerstone of its investment appeal, and this chart says it all. The company has a track record of consistently increasing its dividend payout. The current dividend stands at over $5 per share, reflecting a 5-year compounded annual growth rate of 29%. This is an exceptional rate of dividend growth for a company of this scale. While the 1-year growth has moderated to 10.2%, this is a healthy and sustainable rate. This rate is well covered by the massive free cash flow the company generates each and every quarter. For income-oriented investors, Broadcom represents a rare combination of high growth and a reliable, rapidly growing dividend stream. This commitment signals management's confidence in the long-term cash-generating power of the business. It also shows their dedication to returning a significant portion of those profits directly to shareholders, making it a top-tier dividend growth stock. The broader return of capital strategy extends beyond just dividends. This chart shows total capital returned to shareholders, including dividends and buybacks. We can see significant spikes in activity, particularly in 2018 and again in 2025. These periods often correspond with strategic capital allocation decisions by management. The 5-year compounded annual growth rate for total capital returned is an impressive 56.8%, showcasing a highly shareholder-friendly policy. While dividends provide a steady return, these buybacks add another layer of value by reducing the number of shares outstanding. This in turn increases the earnings per share for the remaining investors, boosting shareholder value over the long term. This balanced approach, combining consistent dividend growth with opportunistic share repurchases, is a key part of Broadcom's long-term value creation strategy. Managing a massive balance sheet, Broadcom maintains a strategic level of debt to finance its acquisitions and operations. As of the latest report, the company has over $14 billion in cash, represented by the green bars, providing significant financial flexibility. Total debt, shown in red, stands at approximately $63 billion. While this seems high, it must be viewed in context. Their massive EBITDA and free cash flow generation allow them to service this debt comfortably without financial strain. The chart shows a significant increase in both cash and debt around 2018, likely corresponding to a major strategic acquisition. This fortress-like liquidity gives them the flexibility to weather any economic storms and continue investing in their industry-leading R&D. It also allows them to pursue further strategic M&A opportunities as they arise, ensuring their long-term competitive positioning in the market. Broadcom's competitive advantages are formidable, centered on its massive, fast-growing AI revenue base and a multi-year backlog. The company has secured over $20 billion in AI semiconductor revenue for fiscal 2025, a 65% increase year over year. This is driven by deep relationships with hyperscale customers who rely on Broadcom for custom silicon or XPUs. Unlike competitors relying on merchant GPUs, Broadcom co-designs these custom AI accelerators, providing a diversified and sticky revenue stream. Their leadership in networking, spanning switches, DSPs, and lasers, is critical for building the infrastructure that powers AI data centers. Long-term, multi-chip customer agreements provide strong visibility and a deep competitive moat against rivals. As customers expand their AI roadmaps, Broadcom's customized solutions become even more integral, ensuring their continued leadership. However, no investment is without risk. Broadcom's growth is heavily dependent on AI-related demand from a few hyperscale customers. While they have a significant backlog, there is limited visibility beyond the 2026 timeframe, creating uncertainty around this hypergrowth. Any slowdown in AI capital expenditures from these key customers could materially impact revenue and future growth projections. Furthermore, the company faces margin dilution as it shifts from higher margin system-level sales to rack-level solutions. Management has guided that this mix shift will pressure gross margins by about 100 basis points, a key factor for investors. While they expect operating margins to improve, this structural headwind on gross margin is a critical point to monitor closely. The ability to manage this transition while delivering profit growth will be a critical test for management in the coming quarters. Wall Street analysts remain largely optimistic about Broadcom's fiscal outlook. For the current quarter, the average EPS estimate is $2.17. The full current year estimate from 28 analysts is $10.27. The forecast for next year is even more bullish, at an average of $14.46. This represents a significant step up in profitability, reflecting confidence in Broadcom's ability to capitalize on the ongoing AI boom. The strong analyst consensus provides a solid external validation of the company's growth trajectory and its potential for stock price appreciation. Finally, let's look at the valuation summary. Broadcom currently trades at a market capitalization of over $1.5 trillion. Its price to earnings or PE ratio is 60.14, which is high, reflecting the market's significant growth expectations. The company's dividend yield is 0.76%, with a payout ratio of 45.87%, showing the dividend is well covered by earnings. Profit margins are a healthy 36.57%, and operating margins are even stronger at 40.69%, with revenue growing nearly 30% year over year. Now let's look at how the market responded. The stock, ticker AVGO, closed at $333.20, up nearly 5% on the day. This strong positive reaction indicates that the earnings report and forward guidance exceeded investor expectations. Trading volume was massive, with over 34 million shares changing hands, showing high institutional interest. The 52-week range of $138 to $414 shows the incredible run the stock has had, and this report provides a vote of confidence. In conclusion, Broadcom's Q1 2026 report paints a picture of a dominant technology leader firing on all cylinders. The combination of revenue growth, expanding margins, massive cash flow, and shareholder returns is truly best in class. Thank you for joining this deep dive. We'll see you in the next analysis.